Hello, ladies and gentlemen. My name is Greg Michalowski from ForexLive.com. This is a Forex video midday after the CPI data sent the dollar straight to the upside. And since then, we've had a squeeze that has sent the dollar straight to the downside. So I was going to try to make sense of it from a technical perspective. And the best way to do that is a video. I'll be able to take a look at a number of different currency pairs and kind of outlined, sort of what happened and where we are right now. So I hope you patient and enjoy this video and learn from it as well. Let's take a look at the euro versus US dollar. And in my pre-market video that I released yesterday, I outlined this area as a level that the price needed to get to and through. I also outlined the 0.9662 level. That level, again, goes back to the weekly chart of the euro versus US dollar, all the way back to June and October of 2002. That was the lowest level, the 62 level of that period. And we needed to get below that level, also needed to get below this level. And you can see that we went below one of them, but and the other one, we barely went below that level, only to bounce back and move higher. Now, the price did get above this swing area, and then we came back down into that area, but could not get back below the 96.62 level. So when the price moved above the 100-hour moving average here, what did it do the next hourly bar? It held support against the 100-hour moving average. So what is that telling you? That is telling you that sellers are turning to buyers at that level, and the price indeed moved higher. And where do we go? We went right up to the 200-hour moving average, briefly above it, and we're currently trading right at that level at 0.979007. You can see it's trading just above and below that level right now as we speak. And if we get above that level, we should see another squeeze toward the 50% retracement of this move to the downside. Also a swing area through here, and get above that level, and it opens up the door for further upside. If we hold this level, which we're trying to hold right now, I wouldn't necessarily say that we're racing to the upside just yet, but we are trying to hold this level. There's a battle going on. We'd have to see the price get back below the 38.2% retracement, which is also near the Tuesday high price here. So that would give us two reasons to sell. As you can see, the low price right here just held support against this old high, against the 38.2% retracement. So the buyers are still trying to hold support and take this pair to the upside. That's going to be the battle in the next few hours of trading. Let's take a look at the sterling versus US dollar. And this pair got a run to the upside here off of the budget news out of the UK, or the budget rumors that they would take away all that stimulus that the Trust administration had put into play. That sent the sterling versus US to the upside, but then the CPI data came out, and the market had a dilemma. It had a dilemma between the bullishness from the UK and the bearishness for the pair, or the stronger dollar, as a result of the CPI data. Well, that problem was solved by the technicals when the price started to move back above this swing area here. Swing low, swing low, swing low, swing low, swing low, swing high, swing high, swing high. Swing low, swing low. You get the gist here, and we move back above that level, and suddenly the sellers turn to buyers, and we force the price all the way up to really to test the high price from last Thursday's trade through here. We have another swing area up here that the market would look toward as well. So the buyers are in control here, and it would take probably a move back below this area through here. This floor / ceiling area through here, with a number of different levels to decrease the bullish bias here for this pound versus US dollar, at least in the short term. So pay attention to that. The dollar versus yen, this is another one of those currency pairs. We're in this channel here, and we tried to move a little bit above it yesterday and couldn't. The market came back down. And off the CPI data, the market moved up, and we extended above the topside trend line here at 147.25.6. And then the price started to lose its momentum, fell back into the channel through here. But we did find support against the high prices from yesterday, right here, give or take a few pips. And the market is trading in between topside channel trend line and this level right through here. I will say that we did have, I failed to say that we did, when we first moved above here, We then moved sharply to the downside here on the failure. And where do we find support against the old trend line here? So right now, we're trying to reestablish support against this old high. If we break below that level, going back to the old trend line right here, the bottom channel trend line would be our target for the dollar versus yen. On the top side, we need to get above the top side channel trend line, which probably comes in, let me see, around the 30 level, 147.30 level. On the downside, this channel trend line currently comes in at around the 146.50 level on the downside. So pay attention to that. Now, I did a video on the commodity currency pairs and outlined reasons to think that the bears were still in control and reasons why, what would cause them to not be in control. And looking at the dollar versus Canada, the reason for being in control was getting above, off the hourly chart at least, was getting above this swing area, these highs through here. And you can, when I did the video, the price was somewhere around here. As long as the price stayed above that area, I said the bias remains more to the upside, in favor of the upside. I also supported that by taking a look at the 5-minute chart and outlining the correction zone. The correction zone is of the trend move right through here. This is a trend move to the upside, and this is a correction zone through here. As long as the price remained above the 38.2 to 50% retracement, the bias would remain to the upside. Well, what happened? Well, the price started to dip below that 50% retracement. All of a sudden, buyers turned to sellers near the 50% retracement, and we've seen this rotation all the way to the downside, and even below the 100-hour moving average, which held support right through here. So falling below the 100-hour moving average at this level, 137.782, is now a close risk level for the sellers. As long as the price remains below the 100-hour moving average, the bias remains to the downside. The same dynamics went into play with the Aussie versus US dollar. For this currency pair, we were trading below these lows through here, right around here. And I mentioned how as long as the price remains below these levels, the bias remains to the downside. And we took a look at the 5-minute chart here, and in this chart, we did the same story, where as long as the price remained below the 38.2 to 50% retracement of the trend move to the downside, the bias remained in favor of the sellers. Well, what happened? The price started to move above the 50% retracement, and then we based against that level, and lo and behold, we raced to the upside, and we are stalling right near the 100-hour moving average now, near the 0.62927 level. We'll take a look at that chart here. There's our 100-hour moving average. So full lap to the downside and back to the upside here for the Aussie versus US dollar. Quite an amazing day. But what the point of all this chatter is that there are technical levels that we as traders have to pay attention to. We have a bias. We have the fundamental story. We sort of understand the story. We understand the bias. But it is the price action and the technical tools that we can apply to our charts that really tell the inside story of what the buyers and sellers are doing. And that was the purpose of this video, and hope you learned from it. It's also the explanation, or my explanation, I guess, for some of the price action that we're seeing here today. Big squeeze, buyers turn to sellers, sellers turn to buyers. What it's about, and we have to pay attention to it. We may not like it, but it's part of trading. My name is Greg Michalowski. Good fortune with your trading. Bye-bye now.